Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Hi there and welcome to the ISC FX Options Weekly Outlook for August 9th, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. While the US dollar index continues to slide lower, testing the lower range of our 80-82 focal zone. This level should hold as support, and a positive close this week could open the window for a retracement back up into this 84-85 focal zone. Now, a short-term break above the 81 level on our daily chart is likely to test resistance at 82. Let's take a look at the US dollar versus the Canadian dollar as seen here in the ISC FX Options Pair Value CDD. Well, the CDD closed the week back in our 102-103 focal zone after a brief test of a small support at 101. Failure to break beyond 103 is likely to result in a test back down to this 101 level. A break above 103 opens the window for a retest of 105-106. While the YUK, the US versus the Japanese yen, spent last week bouncing around within this 85-86 focal zone, suggesting some support at this level. Now, a break above 86 opens the window for a push towards this 88-89 focal zone. However, the trend in force remains to the downside. Next up, the EUI, the US versus the Euro. Well, the EUI is hanging on at 75. However, a failure to hold here is likely to result in a test all the way down to this 73 level. A break beyond 76 opens the window for a retracement higher. Well, the US dollar continues to lose ground against the British pound as the BPX slipped lower to test the 62-63 focal zone for support. Now, a break below 62 is likely going to signal another leg lower. A break above 63 should retest 64-65 for resistance. Well, the AUX, the US versus the Australian dollar, is trying to hang on at 109, but the path of least resistance continues to be lower, with the 106-107 focal zone being a very significant support zone. A break above 110 is likely to follow through with a test of the 112-113 focal zone for resistance. Let's take a look at a few of our key points. First of all, the US dollar slid lower to test 80 as support. We should see a bounce this week. However, the path of least resistance continues to be lower. The CDD closed the week back in the 102-103 focal zone. Support here should yield a test of 104. The YUK continues to respect the downtrend. As with last week, 85-86 remains an important support level. A close above 86 lends credibility to a move higher. The EUI spent the week consolidating above 75. We need to see a break above 76 to lend credibility to an upside retracement. The path of least resistance continues to be lower. The BPX spent the week consolidating between 62.5 and 63. A break above 63 should signal a retracement higher. However, the trend remains strong to the downside. The AUX nears a very significant support at 106-107, but spent last week consolidating between 109 and 110. We need to see a break above 110 to lend credibility to a reversal of the current downtrend. And this has been your ISC FX Options Weekly Outlook for August 9th, 2010. As always, this is Jason Ayres of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISC FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.